Hello MRAA dealers, my name is Jared Zimlin with Elite Recreational Finance, and I'm here to share 5 tips to help you succeed with the financing at your next boat show. Tip number 1, make sure you have the right tools in your toolbox. Those tools include access to all 3 credit bureaus to do soft pulls, the proper mix of lenders, and you want to have your invoice cost for all your new boats at the show, as well as any boats at the dealership. So let's go through a little deeper into what I mean. A, ability to soft pull credit. You want to get an idea what the customer looks like so you can more accurately quote rates, payments, terms based on their actual credit versus just a guess. And if there are any issues that might creep up, you can discuss them right there. A soft pull is not going to show up on their bureau. It's not going to hurt their score. It gives you a nice soft way to learn a little bit more about them to see their ability to purchase. The reason you want to look at all 3 credit bureaus is each lender looks at a different credit bureau. So if you're pulling an Equifax and they're looking at Experian, you may not be looking at the same thing. So you might see something that's good, they might see something you didn't see, and it could cause issues getting the deal bought so you can get the boat delivered. As far as the proper mix of lenders, you want your A-tier lenders, your B-tier lenders, your lenders that buy for people that, well, bad things happen to good people, but they still want to go fishing. You want to make sure you have them. You want lenders that will say, hey, you put a lot of money down, we'll give you great rates. And lenders that say, look, we'll advance a little further. They don't need to put as much money down. And that might be the customer's goal, is to put less money down. They may pay a higher rate, but at least you've met their needs. So that's what you need there. Second thing, call all your lenders and learn if they have any promos for the show. A lot of lenders will go ahead and give discounts for a boat show. That could be a 1/4 point or a 1/2 point. That could be some sort of bonus. These are ways you can offer your customer a better rate at the show so they close and commit at the show. Or could help you cinch up a deal where you're not making much money on the front end because you're trying to move that last year's boat. You can make money in the back end with that extra point, 1/2 point, that's going to give you a little more money in the bank to help the customer get on the water without you going underwater. Third point, now this is really important. Study your rate sheets for each of your banks and learn the sweet spot of loan to value and credit score. See, a lot of dealers will say, hey, this customer's got an 800 credit score. I don't understand why they got such a rate. Most lenders will tier their scoring not just based on the amount financed and the credit score, but also the loan to value. What I mean by that is on your new boats, they're gonna say, hey, what did you pay invoice? What is your retail? And what's the difference? Simple math. If the retail's $100,000 and you paid $75,000 for that boat, then your loan to value is 125%. Most lenders' sweet spot on their rate sheets is at 110% or below. So how do we set proper expectations so our customers are putting the right money down, and any signage we put up has the proper down payment disclosure to make sure we're more likely to get those better rates? Simple. Take the invoice cost, $75,000, multiply times 1.09. You're below 110%. So that's going to bring you to $81,750. So how do we get from $100,000 to $81,750? Simple. You set a down payment expectation of $18,750. If your customer is willing to do that, they're more likely going to get to that below 110% loan to value. They're more likely going to qualify for those better rates. This is why it's also important to have lenders that may not need that much money down. They may allow for 120 up to 130% loan to value. Now, the rates are going to be higher, but this way if your customer says, hey, I like the boat, I like the price, I just don't really feel good about putting the $18,750 down, here's what you can do. Find out what they want to put down. Send the deal to the lender that's willing to accept that. Restructure the deal, showing the proper amount of money down to get below 110%. Send it to another lender. Now you have 2 approvals, one with what they want to down payment wise, one with what they probably want rate wise. Now you can go back to the customer and share what you found out to say, here's what I can do with the money you want to put down. If you put a little more down, here's where your rate and payment's going to be. Which way do you want to go? This way, it kind of takes the pressure off. You're meeting their needs, but you're also making sure that you're not setting false expectations. Just because they have an 800 credit score, if they don't have enough money down, they may still be in that higher tier. So we want to get them below that tier so we can meet their needs. This goes to point number 4. What are they expecting? Post the payments. That gives them a clear picture to what to expect. So be prepared to post your payments. And when you're posting your payments, you can now take that math we just talked about on the loan to value. And you can say, okay, for someone with an 800 plus credit score, with this much money down, and this much to finance, my payment's gonna be this. Post that payment. People can make sense out of how much is coming out of my pocket today and how much is coming out each month versus 75,000, 150,000, 200,000, $500,000. You can go up and up and up and up. Doesn't matter. What people who want to finance want to know is what's coming out of my pocket today and every month. Post the payments. When you are posting payments, make sure you have the proper disclosures. Make sure you put on there W.A.C with approved credit. And then you put on there this amount to finance with this much money down at this rate for this term. So clearly, if they ask how you got to that payment, you can disclose how you got there and you can let them know it is with approved credit. But you can go back to point 1 and say, hey, we do a soft credit pull, it's not going to impact your credit to C. And this goes to point number 5. Get the app. The more commitment they make at the show, the more likely they are to move forward. Even if they don't quite get on board 100% of the show, they're more likely to take your call after the show if you have a credit app and you've got great news to share. So let them know, hey, this is the boat you're interested in. Why don't we write it up subject to comfortable financing? We can go ahead, do a credit app now. It's a soft credit pull. If I can get an answer for you today, we'll definitely do that. However, I may have some lenders that are not open on the weekend, but they may have better programs for you. So I can go to work for you now, and I'll get back to you next week. And this way, you can compare what works for you. Either way, you can close them at the show if you get the right approval, which I recommend. It takes them off the street. But if you can't and it needs a little work, when they fill out that credit app, they are more likely to take your phone call than you just calling them back about a boat that they looked at when they probably looked at 10, 20, 30 boats in between finding parking and everything else that goes into going to a boat show. So you're going to increase the likelihood of them taking your call if you get that credit app. And by doing those 5 things, hopefully you will improve your ability to get deals bought, you will set the proper expectations, and you will deliver more boats to make the financing at your boat show as successful as it can be. My name is Jared Zimlin with Elite Recreational Finance. We help dealers with their retail financing. We'd love the opportunity to help you. On behalf of the MRAA, I thank you for taking the time to watch this video.